Harry, you've made some comments in the past about brick and mortar still needing to get smaller, just in terms of capacity, real estate.
Right.
Do you think, where are we in that?
Well, we're a long way from getting the supply and demand back in line.
So still too much capacity.
There's too much capacity, and with real estate comes inventory. So there's too much, not just physical space. There's too much inventory in the system, and that creates, a pricing issue over time. When there's too much inventory, the only way to get rid of it is to mark it down, and so that becomes an off-price issue. So Macy's took the position a couple of years ago, while I was there, to reduce 20% of our store plates. It was a hard decision, Maria, because those stores are all cash flow positive. Wow. We got rid of all the bad stores a long time ago, over time, but this was a big decision, but we knew that just watching the curve, that the stores were losing traction on sales, on foot traffic, and over time, you're not going to be proud of those stores. And if you're not proud of those stores, you're not going to be able to keep the selling team that's so vital and so important to the consumer in those stores. And we just got to get in front of it and rationalize the real estate. We did that, made that decision. It was the right move.
So let's talk demand, because you got the supply side of the story there. Demand has been good. Back to school, how do you characterize it?
Very good.
Yeah?
So far from reports that I've seen, back to school is very positive, and that's generally a good indication for holiday sales. It's not a guarantee, and it's less of a factor today than it was 10 years ago, but when it was much more of a direct correlation. But having said that, you definitely want to feel like you've got momentum going into back to school as you're buying for your holiday season.
Does the back to school give you an indication of what we might see over the real important, even more important, is the holidays, Christmas?
Yes, it does. As I say, it's just not as as clear of a line as it once was. It's definitely a positive. What you don't want is to show negative signs in back to school, because that just gets our buyers skittish about buying for the holiday season. And so I think what you're seeing here, you're going to see some optimism in the buying pattern for retailers for the fourth quarter.
So you got a 4.1% GDP for the last quarter. The Atlanta Fed comes out the other day, says we're expecting 4.3% for the third quarter. 2 straight quarters of 4% growth possible. Is this sustainable?
I think so.
The way the consumer feels to you today, do you think that's sustainable?
Yeah, and consumers, Maria, is the right word, right question, because 70% of GDP growth is driven by consumption. So we just need to make sure that this consumer is still feeling good 3 months from now, 6 months from now, 9 months from now. Pocketbook is good. Unemployment remains very, very low, and all of these indications of confidence that are there today need to remain.
So, how sensitive do you think the consumer will be to higher interest rates? We heard from Jay Powell on Friday. They had the Jackson Hole meeting. We know the Fed's probably going to raise rates in September. Do you think that a steady, sort of slow but steady move in rates changes this for the consumer?
First of all, you have to begin with the base. I mean, we are at 2% interest rate. It's not like we're at 8% going to 9%. Okay, we're at 2% interest rate. We're at record lows, and so I think from the base where we begin, this is much less of an issue than it would be if we were at a higher base. I think the economy can handle the increases that the Fed has in store, whatever they might be. I think they've signaled 2 before 2018. Who knows if that's going to be what they'll do, but that's what they've signaled. And I think if they're as modest as they've been, we went from 1.75 to 2.0 this last round. If they're as modest as that, I think the economy can clearly handle it.
One of the things that happened on your watch, under your tenure, is the entrance of Amazon.
Yes.
And that changed the industry, didn't it?
Yes, it did.
Tell me how you dealt with this new, smaller entrant in the business, what you did to change to get Macy's as strong as you could.
No, so the good news was for Macy's is that Macy's began their Macy's.com website in the late 90s, actually the mid 90s. And so we already had a platform to turn into an online business. So by 1999 and 2000, when all of the .gon era and all of the .gon, all of these companies that many people have forgotten about now, that were riding high at 50 multiples and 80 multiples and 100 multiples,
yeah,
but there was really no multiple because they weren't making any money, you know, and so they're all
counting clicks to the website.
Exactly, clicks, multiple of clicks,
right.
and so they got wiped out in 99, 2000, which was unfortunate for many, but it was the right thing because you began to have a business model, you know, that could actually produce earnings
right.
for shareholders over time, and so when that happened and everything sorted itself out on the online world, Macy's was already in position to stay with it. Amazon, you know, obviously did some very, very good things. I think the brilliance of Amazon is their non-retail business. I mean, their cloud services, their distribution, their logistics.
Oh, they're taking market share in the cloud.
They're doing unbelievable in all these places, which frankly pays for the retail business that is far less profitable for them than these other services businesses. Yeah, so I think they're actually quite brilliant in this regard.
Terry, it's great to have you on.
Thanks, Maria.
Thank you so much for joining us this weekend. Terry Lundgren, what a career.